Hello and welcome back to my 7th weekly forecasting video where we go through some of the major pairs of the Forex market and I break down my positions, what I'm thinking about the current state of the economy, what I'm thinking about my trade ideas from a technical perspective and just everything like that. So jumping straight into it, we have the DXY. If we drop onto a weekly chart for now, we had this order block marked out in the past couple of weeks. However, we've been pretty much within the worst chop of the year so far, to be honest. So we've covered quite a lot, quite extensively, about making sure that we aren't over trading within these conditions, and we also are realistic with the sort of returns that we can get. Every trade idea is catching expansion and divergence in price in one way or another, long or short. However, when you are very range bound and you are just sort of tackling back and forth within this area, then you're realistic about the fact that you're not going to be catching runners, especially when we look at the price action from the start of the year all the way down because of the tariffs. However, we are range bound, so we do keep it realistic. So anyway, dropping down into a daily chart, we did have a run on this sell side liquidity, a displacement higher, creating a fair value gap, and then we had a failed swing low which returned to that fair value gap and then displaced higher again, creating the second leg of distribution as it seems, which is marked out on the charts already, which is this down close candles, which creates an order block, bullish order block, and this fair value gap paired together. This makes a high probable entry, which is a very nice area to look for longs in price. Now, with the current state of the US economy, we've covered quite a lot that it's not doing very good with its inflation, but it's also struggling with the labour market, which is creating some sort of stagflationary period for them. With a government shutdown as well, we do have news events that have been paused. Data's not been released as it usually would do every week, which almost creates the sentiment that the economy is struggling, which would actually point its hand towards a lower DXY. However, with the inflation stood behind it, it is difficult to get sort of a clear consensus on what's going to happen with the rates. So with the fact that there's no new data being added, we've already been range bound for quite a few weeks, and the fact that we aren't getting those data reports adding to any confluences now, I would definitely not be surprised if we don't see so much expansion for the next up and coming week. Not to say that this isn't a good technical entry. We've ran these stops, displaced higher, made a first leg, displaced higher again, and then we're now back in this area. However, all I'm saying is I'm managing my expectations of the fact that I don't think low resistance liquidity runs will be just running really easy. Your trades won't just necessarily explode as they usually would maybe at the start of the year. So looking at this though, if we look at it from a more technical perspective, we did have an initial consolidation, we did have a run down on stops, and then we did have some distribution candles here. So if we're actually looking at this from a technical perspective of ICT, we've had a run on stops, we've had a smart money reversal, we've had the second leg, and now we are returning back into this area here, which is the second leg of distribution, also known as ICT's silver bullet. However, this is just on a daily chart, it's not an intraday trade. So pairing this with the EURUSD, which is what I'm currently looking at, we actually did get that return to this range. This is literally just the inverse of what you've just seen on the DXY. We had this run on stops here. We created a failed swing high, shot down lower again, and then we've returned. I actually did opt for a 75% retracement level just because we weren't exploding into this area. So this is what this currently looks like on the daily chart. Now, I do think this stop loss, from my perspective, and none of it's personal trade advice, but just sort of sharing my position, this is a very good swing point because this trade idea is literally bread and butter ICT concepts. It's a run on stops, displacement away, created a market structure shift. We've created the second leg order block fair value gap as an entry. It's a beautiful technical trade. So if this stop loss does get hit, then I'm pretty happy with the fact that the trade idea is just wrong. Followed all the rules. One of the big things about trading isn't the fact that you can win every trade. It's more just the fact that when your model does present itself, you do follow that model and you execute correctly. So losing is a part of that, but as long as you ensure that every time you take a trade, you've got the right confluences, the correct amount of risk management, you manage that risk accordingly when you are within that trade, then to me that pretty much ticks off everything I need to do in order to make sure that an edge plays out within the market, especially within my favour. So if we go to GBPUSD, we can see that range again here, we had a much further retracement higher within the range. We got pretty much just to that one, however we didn't take it out, and then we've closed still pretty high up into that 7.5 level. So this does show that if I'm looking for shorts, then at the minute the euro is weaker, which is a good confluence for a more expansionary run on euro if this idea is correct. But as I said, I'm definitely not getting married to any ideas within the market currently. I am managing effectively, and almost to share a bit more on how I'd consider that technically, I would just look to shave risk more aggressively. If you've got a nice displacement away and we start to get down towards this level here and we're getting close to profit, I definitely don't want risk on, and I definitely want to look to actually shave in profit just to take something off that trade. Within these periods when things aren't favourable, one thing I do see a lot is people just holding and marrying trade ideas and just having this idea of you either do or die, and then they just end up walking away with a lot of unrealised profit missed, and it causes them quite a lot of issues because they get nothing, maybe a break-even trade, which isn't bad in itself, but they could have taken something heavily away from that, and then they just accept the losses as a full loss, and then their edge starts to corrode within these sort of markets. So it's just important to keep an eye on this. I'll be looking at Euro GBP to see if it is subject to change. There is a weekly fair value gap here, which could send the euro strength higher, which would actually then mean that the GBP could be the flip. So it's definitely worth monitoring, but it's when things are uncertain, you could make a case higher versus lower, then it's usually good to just stick with the euro, as it's slightly more correlated to the DXY than the GBP is. So it's always a safe bet with that. So if we look to the US 10-year bonds, obviously we have retraced higher, come back into this fair value gap again. This would make a case for a lower dollar. However, I do think we've still got room within this leg of price to have a bit more of a retracement higher. So it's again, it's all about monitoring. I think we're in stage now where the news releases are uncertain, so we don't expect expansion. Price is currently at like 50% of the range. It's sort of dipping about, so it could either continue higher from this point on the bonds or just trade down lower from this weekly fair value gap. So it's not to say that I have no idea what's going on, but the point is it's always worth, especially if you're in a position, for example this euro position here, managing effectively. That is pretty much what I'm going to be covering most. The main topic of this particular weekly analysis video is just making sure that, I can't reiterate enough, if price goes your way, you don't want to be marrying a trade idea and having the stop loss in a do or die situation. There's just no need. You understand that the current market conditions aren't as favourable as they could be, which is completely fine. However, it's just very important to make sure that you're always managing effectively. So other than that, gold, if we just cover gold quickly, again, we've just been on a one-way run since 2021 or something, 2020, COVID levels just absolutely ripping higher all the time. Every single institutional order flow entry drill just seems to be absolutely sending us parabolic higher, which is good. I find it difficult because it's a lot of the time, where do you get retracements within this level? It's okay saying I could have got in from here, but where do you put the stop? It's if you're scaling in positions and leaving stops wide, then it's not a bad thing. If you're buying gold and holding it, then again, that would work as well. But it's either absolutely running off or it's either chopping. So I don't really trade gold, to be honest. I just thought I'd cover it just as a quick one. The bonds, again, on the US 30, we've been chopping around. We've come back. You could make cases on the weekly chart for the fact, again, we've not got to that weekly fair value gap, so there could be room to push into there, sweep these two equal highs and then go lower. Which would be against the US 10-year. Moving on to the DXY again, so just to sort of draw a conclusion, I am more leaning to the fact of what price is telling me from a technical perspective. If we were to draw this on a on the DXY chart, I've done that twice. Pretty much, that would be the idea. You know, that's the idea that we're currently rolling with, and I'll see how that plays out in the up and coming week. If I just pull up the Forex factory calendar, just to have a bit of more of an insight of this. Again, there isn't really much to cover here because, yes, we could say that the unemployment claims and the non-farm employment change would be potentially news events to look at. However, they're all tentative at the minute. And if these news events don't come out, then I can't really cover the fact of what that data means if we don't have that data available. Again, US government shutdown has been affecting these news reports. So just especially if you're intraday trading, don't expect too much until things start to clear up. You know, there is times where you do have to sit on your hands and preserve that capital, especially if you've got no catalysts for volatility within the market within the day, which is, you know, most commonly how you frame your day around that news event in order to see when the volatility is going to be coming in. Is it going to be at 8:30? And then you frame your model around that aspect of time. However, if that's not there, then, you know, just because you might see a technical model doesn't mean you've paired it with the time aspect as well. So that's something you can be caught out with. Other than that, that about covers everything. It's a bit of an uncertain week, especially with the news. We usually use that calendar as a direction to see when that expansion is going to happen within the week. But with that being said, if we don't have those news drivers, I'm just going to, you know, just manage effectively the trades that you are in. That is the best takeaway I can give from this price. That's what I'm going to be trying to do, just manage those stop losses effectively. It's a skill, you know, once you've seen a few market conditions, which is a struggle for maybe traders within the first 3 to 6 months of learning. They've only ever seen the market condition that they're in. So say you started in this, you know, learning, you might be a very skeptical trader of just everything being a reversal, high to low, premium to discount. But if you started learning maybe start of this year, you would see low resistance liquidity runs with just one way price, and you'd be like, okay, I can just short it when it's going down and I'm winning. So it's always about seeing those different market conditions and then sort of making adjustments effectively to the price action that you're getting, and just understanding that, you know, P&L isn't just consistent all the time. You will have better months than others, and hopefully by the end of the year you end up in the green. So thank you very much for watching today's weekly forecasting series. If you did enjoy, please subscribe, like the video. It would help a lot grow this channel. And other than that, guys, have a safe week's trading.